Types of partnership. There are basically 4 different types of partnership. First is general partnership. In case of general partnership, the liability of all the partners is unlimited except in the case of minor. If there is a minor partner in the partnership, then his or her liability is not unlimited. So if the business assets are not sufficient enough to pay off the debts of the business, the personal property of the partners can be used to pay off the creditors of the business. However, this rule cannot be applied to the minor partner. This is because as per law, the minor partner cannot have an unlimited liability. The liability of a minor partner is limited only to the extent of his share in the capital and the profits of the business. Limited liability partnership. This form of partnership was not allowed earlier in India. However, limited liability partnership is now allowed in India under the Limited Liability Partnership Act 2008. What are the features of limited liability partnership or LLP? Compulsory registration. A limited liability partnership must be registered under the Limited Liability Partnership Act 2008. It should have minimum of 2 partners. However, there is no limit on maximum number of partners that the firm can have. LLP has a separate legal identity, just like a joint stock company. In eyes of law, the firm and the partners are 2 separate entities. Limited liability of the partners. The liability of each partner is restricted only to the extent of amount that he or she has agreed to contribute to the business. The partners cannot lose any amount more than the amount that they have agreed to contribute to the partnership business. No liability on account of any unauthorized action of other partner. So if any one partner indulges in an activity which he is not authorized to do, the other partners cannot be held liable for the same. The accounts of the partnership firm should be maintained in such a way that it reflects true and fair state of affairs of the business. Unlimited liability in case of a fraud. Even though the liability of the partners in this form of organization is limited, they cannot misuse this advantage. If the business or the partners indulge in any activity with an intention to commit a fraud with creditor or any other person, then in such a case the liability of the partners will become unlimited. Perpetual succession. Since the limited liability partnership has a separate legal identity, the death, insolvency or insanity of any partner does not affect the continuity of the firm. Thus, limited liability partnership is like a combination of both partnership and a joint stock company. The major advantage of this form of business organization is that there is no upper limit to the number of members that the firm can have. This increases the fundraising capacity of the business. Also, since the LLP has a separate legal identity, it can enter into contracts in its own name. So, a LLP can buy or sell the property or undertake any such activity. The third type of partnership is particular partnership limited by time. When a partnership is formed for a particular period of time, like 1 year or 2 years, it is called as particular partnership limited by time. This form of partnership gets automatically dissolved after the completion of the period for which the particular partnership was formed. For example, if a particular partnership is formed for say 2 years, then this partnership will automatically come to an end on completion of 2 years. The next type of partnership is particular partnership limited by purpose. Such partnerships are generally formed for a particular purpose. For example, two people can come together to build a residential complex. And this kind of partnership gets automatically dissolved on completion of that purpose. So if two people come together and form a partnership for building a particular residential complex, then this partnership will automatically get dissolved once the complex is ready.